broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. Thank you very much for joining us today. I'm Meera Raja, the VAT partner of James Cooper Creston. I'm joined today with my colleague, Jeff Ruddle. We're going to do a poll question first. We're going to talk about grants and contracts today, but I thought it would be good to post a question to see what's your understanding initially, and then we'll post the same question at the end. If you can please answer those. Okay, that's a very good start. So it obviously is going to make our life easy today. So let's get going. We're going to talk about four topics mainly, how to distinguish between a grant and a contract, the impact of a recent ECJ decision on VAT recovery of cost of managing an investment fund, how to maximize use of VAT relief on purchase of goods and services, and the final point is how can a charity with a mixture of grants and commercial income maximize VAT recovery. The first one I'm going to talk about is a grant or a contract. So why is this important? A common question for charities is, what is my income? Is it a grant or a contract fee? There are different VAT consequences for grants and contracts. A grant is outside the scope of VAT and may be eligible for gift aid, whereas a contract will have a specific VAT liability. Going by the answers, 89% have said no. I take it many of you probably have an idea of what is a grant and a contract is. Different consequences. If a charity receives if a charity receives grant funding, the income is outside the scope of VAT if the grant is given freely without any goods or services provided in return to the grantor. Whilst there is not a very clear statutory definition for a grant, it can be viewed as a freely given payment from a funder for the furtherance of a charity's objectives. We'll talk more about it, give you some details later. It does not normally give rise to any particular benefit supplied to the grantor, as you are contractually providing anything. VAT will not be due. The determination of a grant or a contract all relates to what is being supplied. So again, I'll take you through some examples in a while. And on that is a third point, is that grant funding is outside the scope of VAT, whereas contract is a supply and consideration for a taxable supply. Often the grant document includes a number of provisions or instruction that restricts the use of the funding by the charity. These restrictions or reports back to the grantor are to ensure that funds are used for their intended purposes and should not be interpreted as a supply of goods or services to the grantor. If I can expand on that, many of them, when we ask a question, are you giving anything in return for the grantor, they do get confused with the monthly report or how the fund is used. If they're reporting that back to the grantor, that is really not a supply. So that is often people have taken confused with that, and they've taken that as a taxable supply because they think they have given something back in return, and that is not the case. It's just by reporting back on a monthly or a weekly or quarterly, that is not a supply given back. That is just purely telling them how your project's coming along, or how the money is spent. These basically, you do that, these safeguards to ensure that the grant is spent correctly, do not turn the grant into a contract for supply or services. Other elements that are not considered a supply include provision of reports by the charity, like I said, funding is helping the charity. Or sometimes they say, okay, even if they come back to you and say, can you give us an update on it? Please do not get confused with that by saying that, it's a supply that you're giving back. It's just simply they're asking how the fund has been used. So the next, then we're going to talk about the characteristics of a grant. I'm going to give you there are a few points, but please do not take this as a tick list, and you don't need all 4 tick to pass this, but it is a starting point. So I'll take you through all of the things that you should look into for you to establish whether it's a grant or a contract. So the first one is characteristic of a grant. Does the grantor receive anything in return for a payment? That should be your first question. The payment was made following a grant application process run by the organization that regularly provides outside the scope grants. The donor receives nothing in return. So you would normally find is like a local authorities, or like a lot of like lottery funding, or a lot of grant funding. So this basically, these are the normal people that you will receive a grant from. Are the funders the beneficiaries of the project? So that's another one that you can test. To be outside the scope of VAT, a grant should be freely given. And using the payment, the supplier carries out its own charitable aims and objectives with assistance of the money, which is given with no expectation or direct benefit in return. So again, this is the main point that we're going to reiterate a few times. What are you giving back in return? That is one of the main things that you need to consider. Then the next one is, are there any conditions attached to the payment that go beyond merely having to mention it in account statement? Answer to that is that the funder will not attempt to control how the money is spent beyond seeing that funds are properly managed. So, that this is another clue for you guys to establish that it's a grant, because the funders normally they don't micromanage how the grant is spent, or they just want to know the money is spent appropriately. Other than that, they don't micromanage. What will the payment be used for? So that's another point. Funding is drawn down by the supplier as a reimbursement of expenditure incurred rather than an advance payment for services. The fund's allocation could be unrestricted to be determined by the trustees. I know it just might be quite daunting when you have a big 90, 50, 52, 100, 150 pages of grant agreement. But when you read certain of these things, you should be able to eliminate quite easily, yes, this doesn't apply, or that we don't, they don't control it, or these conditions purely clarifies that it's a grant. The final 2 points is, if the funder does not benefit directly, does a third party receive a benefit? So what that is, the funding is provided under a statutory provision that empowers the funder to make a grant. So this would be merely relevant if the funder is a government department or a local authority. So again, this only applies to those two funders. And the last point on that is there a contract and what are the terms and conditions? So there is a clawback provision within the agreement. Funders use this method to reclaim their funding in circumstances such as where not all the money was spent or if the term of the agreement were not complied with. Then in contrast, a contract for a supply should not contain a clawback. So that's the difference. So in a contract or supply should not contain a clawback. In a grant agreement, there will be a clawback clause. So that's another clue for you to know that it is a grant. The money is a consideration for, basically there is an automatic clawback for contractor based to say if the work is not done properly, the supply is not made, and they will reclaim the money back. That is not there in a contract, but you will have it in a grant to say that if the money is not spent in the way that you said you were going to spend, they will claw the money back. And whereas for the contractor, it's a consideration of supply and solution, reclaiming the payment is any breach of contract or sue for damages. And so their clawback is a different thing because that's for damages, or if they don't deliver the supply or anything like that. The next bit I'm going to go through is the characteristics of a contract. Who initiates the agreement? So if a funder, when I say funder, sorry, if a customer is seeking a service in return for their payment, then this indicates a payment is consideration for supplies made to them. If the customer is the direct beneficiary of the supplies, and the customer believes they are receiving something in return for the payment. So if I give you, basically if you raise a purchase order, it's usually made, or the contract is won by a tender, both of those will be a contract. Then the second point on that is that the contract is commercial in nature, i.e. it is legally binding contract connected to a business activity. This means looking for indicators such as penalty clause or being in a place, and reference to a contractor or service, VAT, etc. All of that will give you an indication it's a contract rather than a grant. Is there a payment schedule based on activity points? Each activity carried out by the supplier gives rise to a specific and identifiable payment. This is an agreed sum, either a single payment or per activity, i.e. if more work is done, the greater payment. For this to happen, there is probably a detailed recording system for timekeeping or outputs or achievement and all of that. One of the main point on a contract is that the customer will attempt to control how the money is spent. Maybe like imposing specific targets in terms of quantity, quality, timeframes, etc. Any monitoring is more than simply ensuring the payments are spent probably, and to ensure that specific supplies are made. So that is a very clear difference between a grant and a contract. Whereas in the grant funding, they're not going to micromanage, where if there's a contract between a customer and a supplier, of course they would want to know when they're going to get their supply back, and there's going to be more of managing, and they will have more of a control of it. So to summarize these definitions of grant and contract, a grant is freely given with no expectation of anything in return. Grants are not considered for any supply and are outside the scope of VAT. The written terms of grant can make them difficult to distinguish from contracts, but it is important all parties to agree at the outset the nature of the relationship so it can be reflected in the documentation. This is very important. I really can't stress this enough because we have had several clients where they have got caught in this and they ended up paying a lot of VAT back because they have not read it through properly. And like I mentioned before, it can be daunting. You've got more 50 to 150 pages of grant funding, grant agreements to read. But anytime you guys get confused or anything like that, please do get in touch with us. We are more than happy to help you with that. Remember, charities do not have an automatic exemption from VAT, and VAT will be chargeable on the supply of goods and services for consideration, assuming they're above the threshold. The issue of VAT should be addressed from the outset, as HMRC can attempt to recover VAT if it's not correctly charged. I just want to stress that again. Please do be very careful and read it, get your advisors involved, get us involved or whoever, but read it. You need to address this from the outset. Otherwise, the assessment then can have penalties and all the other issues come with it. But one of the things I do want to say is they should not be confused with the sponsorship. A lot of the people where they have got confused with a grant to a sponsorship, which normally involves a sponsor receiving clearly identifiable benefits in return. So a sponsorship is clearly different to a grant. So these are the things that where people have gone wrong is a grant, mistaking grant with sponsorship and grant with contract. So yes, any questions you have, please post it. We can answer it at the end of it, or you can also email us later. I'm going to hand you over to my colleague, Jeff Ruddle now.
Good afternoon. My name's Jeff Ruddle. I'm the VAT Senior Manager here at James Cooper Queston. I've got a number of items to talk to you about as per the agenda. On the first issue we want to talk about is a recent Court of Justice decision based on the recovery costs of managing an investment fund. What I'm referring to is the Cambridge University decision, which relates to the entitlement to recover VAT on investment management fees. What's been happening is HMRC has been denying VAT recovery on these, and in essence, they're saying the costs relate directly to exempt or non-business activity investment. Obviously, what's happened is that Cambridge have been to tribunal, the first tier and then the second tier, and haven't won it either. And the case has been referred to the European Court of Justice. And what they were looking at was the VAT on management fees charged by third parties in relation to the management of the investment funds or the endowment funds. The EC judgment is recent and it only came out in July 2019. And in essence, what the judgment is that there's now no entitlement for VAT recovery in relation to the costs incurred on investment management funds for charities. Now, the ECJ is the final decision maker in VAT disputes in Europe. So that means that what they've ruled is that these costs were not an overhead of any of the activities of the university, whether that be business or non-business. But the costs of investment management are directly attributable to the investment fund and is not considered that these involve the making of taxable supplies. Basically, quite often these investment funds are funded from legacies and donations from the past and invested and managed by third parties. And it's obviously the third parties who charge these fees, obviously with VAT because that's appropriate. And in the past, with partial exemption schemes and business non-business schemes, the input tax was been treated as a residual. What the ECJ's decision does for those people who are incurring these costs is it determines that these are now recoverable. and as they're not regarded as an overhead of charitable activities. So what we were waiting for is an HMRC comment on this judgment, because usually what happens whenever there's an AC judgment, which will affect a lot of businesses or charities, then HMRC will subsequently release a business brief that will cover the position for the future. At the minute, we haven't received a business brief, and there is a bit of growing concern about that, because it does leave charities in the position of, if they get a VAT visit, will the issue be raised by the VAT officer? Does it mean that previous reclaims will be disallowed? But what we'd like to inform you is that you need to be aware that the issue is out there, and that if you do get a VAT inspection, it may rear its head. So you may want to check in your reclaims if you have been incurring such costs and if you have reclaimed them. At the minute, we're not in a position to say that it should be disallowed straight away, but we are hopefully anticipating an HMRC business brief that will help take the position forward for everybody who's involved in the recovery of such costs. The next item on the agenda is more of a general one relating to charities, and what we're going to talk about is the selection of the reliefs that charities can obtain on the purchase of goods and services. No doubt you've heard about a lot of these in the past, no doubt you're aware of the basics of a lot of them, but what we want to do is just run through some of the basics for you again. The main one that a lot of charities receive VAT relief on is advertising. Now, I've no doubt that you're aware that adverts placed by a charity can be zero rated, whether that relates to it's an advert to seek donations, or it's an advert for recruitment or something else. In essence, HMRC will agree that the advert can be zero rated, whether it's on any sort of media, billboard, including billboards, newspapers, online, cinema, or television. And the zero rating can also be claimed by charities that are not VAT registered, so you do not actually have to be VAT registered to claim that entitlement. What has been happening lately is that HMRC have got a bit more restrictive on the extent of the zero rated relief, and in essence this relates to online supplies. Part of the problem is that they have taken the viewpoint that the advertising online is not always for general viewing, and in such circumstances they will seek to make the supply standard rated and not zero rated. Certainly general pay-per-click adverts, these would be normally regarded as advertisements, and where they do not involve any selection, you can probably seek a zero rating on that. Social media and subscription sites, again, where there's no basis of selection, then these could generally be zero rated. But what you've got to be aware of now is quite often people have cookies put into their computer by media sites, and these will lead to a determination and a selection. And if that is the case, then you may find that you will not be able to obtain zero rating, and that will have to be applied. This distinction was sort of updated by HMRC in October 2019, but it is ongoing at the minute. There's still ongoing discussion with the charities specialists. A second area is aids for disabled. We'll cover is just aids for disabled people. It supplies to charities of certain goods and services which charities make available to disabled people for their personal or domestic use or zero rated. And that will include such things as adapted motor vehicles, building works, and vision aids. I see we're starting to run down the time a bit, so I'll speed up slightly. One of the issues we wanted to cover very quickly is construction services, and what we're trying to allude you to talk to you about is that the building of the supply of construction services by a main contractor on a relevant charitable purpose building can be zero rated. But what you have to bear in mind is that the zero rating will only apply to your main contractor and it will not extend to the subcontractor. And the zero rating only applies because the main contractor is supplying you as a client and you intend to use the business for the relevant charitable purpose. What that will take us on to is VAT on rent. If you're a charity that rents commercial space primarily for a relevant charitable purpose or non-business, the charity, you can ask the landlord to convert the supply to VAT exempt. You should reach an agreement with the landlord that he can charge you rent, but he does not have to charge you VAT on that. But you must be aware that if you're using a business which is used for administration, in that case, VAT will be due if the premises has already been opted. A fifth item that we'll just cover briefly is fuel and power. As you're aware, most commercial supplies of electricity and gas are charged at 20%. But as a charity, you can apply for a reduced rate of 5%, but this will depend on situations of qualifying use, and you will probably have to issue a certificate to the supplier to claim the relief. This will apply to buildings where there's more than 60% or more of the supplies are for non-business use for the charity. But you must be aware that any fuel and power, we're only talking about gas and electric, oils and solid fuels, but certainly never in any instance about vehicle fuel. It's quite a separate issue altogether. Okay, we're going to run on to the last item we wanted to cover today, and that was about how a charity with a mixture of grant and taxable income can legitimately maximise VAT recovery. And in essence, what we wanted to refer to here is that we're looking at the basic principle that the receipt of a grant income does not automatically lead to restriction of input tax. Quite often, if you ever get an HMRC visit, they will think that if you've got grant income, then there will be an automatic restriction on the apportionment of any input tax that's been reclaimed. What they need to be looking at, and what we all need to be looking at, is that what is the intended or the actual supplies to be made by the business. In essence, what is the VAT that you're being charged? What supplies you're going to make? What does that relate to? So if you have a VAT visit and you get such a query, you should be prepared to challenge HMRC that grant income does not equal reduced VAT recovery. We all accept that grants are normally outside the scope, as discussed earlier with Mira and raised by Mira, as long as you have the evidence to support that. But sometimes such payments are direct consideration for a supply or a third-party consideration for a supply. And the receipt of outside the scope income does not automatically mean not an activity is not a business, nor will it lead to an apportionment of input tax. What we have at JCK is we do have some clients that do receive grants and do not have restricted VAT recovery and costs. These will include companies, medical research bodies, spun out of universities, and initially all income received would be grants. But the idea is obviously in the future this will lead to commercial exploitation. We also deal with catapult companies funded by Innovate, and these again support innovation and research, and with the idea being that they will lead to commercial sales with VAT to customers in the future. In both cases, it is expected that the companies will be in a VAT repayment position for a number of years, when the only income will be funding from grants. Obviously, the commercial sales will start to happen later. Very quickly, what I'll review of the time, I'll just tell you, has been a case in the European Court of Justice of a similar nature to this. It was a business called Savita, and in effect, the issue was whether input tax was recoverable on the construction of a recreational woodland path, which ended at shop owned by Savita. And obviously they're making taxable supplies from that. The costs of the path were met by a grant received from the Lithuanian Ministry of Agriculture, as long as the path was available free of charge to the public. There's no dispute at all that the grant itself was outside the scope of income for Savita. And initially, the authorities disallowed the VAT on 100% of the costs on the basis that there was no link between there's no link to taxable supplies, since free access is a non-economic activity. So there's no payment for anybody to use the path. Ultimately, Savita argued that the path could be used free of charge, but the purpose was to increase taxable sales from its shop, so down the line there would be supplies. So in effect, there was a direct link between the VAT incurred and its economic activities as a whole. And the ECJ rejected the view that input tax should be blocked, as an accepted expenditure was incurred with the intention of carrying out an economic activity, even if there was no direct link to the one specific supply and use of the path was free. So ultimately the VAT was an overhead VAT and could be reclaimed. So although the path was used for non-business activity, the input tax could be reclaimed. The outcome may have been different if Savita was involved in building the path, but it wasn't, and in essence, it was providing free access to the shop where commercial activity was taking place. And the judgment just highlights the basic right that to deduct VAT that where linked to taxable supplies made by a taxable person can be demonstrated. Is there any further issues you want to cover?
Somebody has posted a question to ask to repeat the sponsorship, why the grant and the sponsorship. If I can reiterate that, basically, if a person who receives a sponsorship or some other form of like any support will normally be making taxable supply, if in return he is obliged to provide the sponsor with a significant benefit. This might include naming the event after the sponsor, displaying the sponsor's company logo or trading name, participating in sponsors' promotional or advertising activities, allowing the sponsor to use the name of the logo of the person being sponsored, giving free or reduced price tickets. All of these will make it as a sponsorship, and it'll be taxable income. And I hope that clarifies that question. We just want to post the poll question again. Oh, we can't. Oh, sorry about that. Thank you for joining us. And if there's any questions, please do email us, and we'll be more than happy to get back to you guys. And also, we will be sending out this. If anybody wants the slides, please do email us. Thank you so much for joining us. Thank you.